Welcome to The Tax Factor, the top 20 business and investment podcast from Blick Rothenberg, the tax, accounting and business advisory firm.
I'll have to turn to the country and make big asks of you as well to accept short-term pain for long-term good.
This week with Nimesh, Shah and Heather Self.
Welcome to The Tax Factor. I'm Nimesh Shah.
And I'm Heather Self.
So the new series of The Tax Factor got off to a great start last week with Roger and Neil. And over the coming weeks, you'll hear some familiar names returning and a few new ones, all giving you their perspective on proposals, tribunal rulings, and some bizarre VAT cases, of course. And a particular favourite of everyone's, HMRC's phone lines and their general performance. And in keeping with the new political mood and new government, we're coming to you from the Blick Rothenberg Rose Garden, of course. Heather, last week, Neil and Roger made some of their budget predictions, but given what you heard from our Prime Minister earlier this week, what do you think is going to happen?
I think they were pretty close. I certainly don't disagree with them on things like changes to non-dom and VAT on school fees, which have been pre-announced. It was interesting to me that Keir Starmer is trying so hard to be gloomy at the moment. He's clearly trying to prepare us for bad news to come. Although I have to say, if you're a Chancellor wanting to do radical things, the time to be unpopular is at the beginning of a parliament. I think you were probably still a toddler when Nigel Lawson did his 1984 budget, Nimesh, but it was my first one as a member of the tax team. And I remember how radical that was. And of course, that was quite early in his time as Chancellor. And the other big example was Gordon Brown in 1997. I think this could be a really exciting budget for us tax people, but I don't think it's going to be good news for most people. One of the things that Keir Starmer has said is that those with the broadest shoulders need to bear more of the burden. If you listen to Paul Johnson from the Institute for Fiscal Studies, who's actually written an excellent book on the whole tax system, which I'm listening to in my car at the moment, he points out that over time, those on very high earnings have accelerated away from people on average earnings, but they're also bearing a lot of the tax burden. And by tying her hands behind her back and saying that she's not going to raise income tax, VAT or national insurance, it's going to be quite difficult for Rachel Reeves to find the money that she needs to fill the black hole. The one big tax rise that's already baked in is the freezing of personal allowances. We've talked about that quite a bit last year. That's baking in about a £10 billion tax rise over the next 2 or 3 years. It's also been something that's barely been noticed. Until it started applying to pensioners, it was almost not commented on. And I wonder whether we're going to see more of that sort of thing. As an example, there's currently an upper earnings limit for national insurance contributions. Employees, once your earnings get over about 50,000, your rate of national insurance goes down to 2%. Now, if they just raise that ceiling or even abolish it altogether, it would be almost the same as putting up the top rates of tax by 5p, and yet they could legitimately say they're not breaching their manifesto.
Yeah, got lots to unpack there, Heather. You've clearly been doing your homework on your summer holidays whilst the Tax Factor's been on its break. And I'm not sure if I'm going to embarrass you or me now, but I was 2 years old on that first Nigel Lawson budget. I don't remember it. I do remember Gordon Brown and that famous Bank of England budget when Labour came into power then. And Gordon Brown still remains one of my favourite chancellors. And I know Rachel Reeves is also a big fan and big follower of Gordon Brown as well. Let's just talk about some of the things that you mentioned around how this government might raise a few taxes, because I do agree with you that Rachel Reeves has really backed herself into the corner. And it's interesting, Keir Starmer reaffirmed that as well earlier this week. They're not going to raise income tax, national insurance, VAT, corporation tax. That's about 80% of the total 800 billion that the country raises in tax revenues. And you're right, pensioners did notice the freezing of the allowances, and that's been a very, very lucrative way of raising some money, a Rishi Sunak legacy there. And also pensioners aren't particularly happy with Rachel Reeves because she's taken away the winter fuel allowance, which some are saying already that's a bit of an own goal. So I can see gloomy picture, the phrase of winter of discontent flying around because this is an end of October budget, the day before Halloween. What other gloomy news do you think that Rachel Reeves and Keir Starmer have got up their sleeve? Do you think they've been planning for this for a while?
That's an interesting question, because that was certainly something that Gordon Brown did. He had a whole unit sort of shadowing what was going on in the Treasury and came into office ready to hit the road with some quite significant changes, not just the independence of the Bank of England, but also abolishing ACT, which was a pretty major change to the tax system. So it's just possible that Rachel Reeves has already got a major reform to pensions taxation ready to go. Who knows? One thing I think we might see is fuel duty. Fuel duty hasn't actually gone up since 2010. And fuel duty is an odd tax. It's not charged as a percentage of the price of each litre of fuel. It's a flat amount. So as prices go up generally, you'd expect fuel duty to go up in line with inflation. And that's the way all the forecasts are made. But actually, it's been frozen since 2010, and there was a 5p cut in fuel duty in 2022. I think we could well see that being reversed, particularly as fuel prices today are about 50 or 60 pence a litre less than they were then. Interestingly, just as we were preparing for this podcast, I found a press release by the RAC saying exactly that. So I do think we might well see fuel duty going up. What I hope is that we do see a more strategic look at the tax system from Rachel Reeves. I hope she has been doing some homework in advance so that we don't just get lots and lots of bitty changes that make the tax system even more complicated.
Yeah, that's my reading of some of the rumours that are going around, bitty changes, because you have got your hands tied behind your back on the big four taxes. Presumably it does have to be bitty ones. I don't know if you can enlighten me, Heather, how much extra billions fuel duty would raise. But I had a call last week about air passenger duty. A pound on air passenger duty would raise about 130, 150 million. Now it's a tax on climate change, it's a tax on wealthy people who fly more, but is it really worth it?
Fuel duty raises about 25 billion a year, and I think the current level is about 75 pence a litre. So if you put it up by 5p, that's 1/15 of 25 billion, a billion and a half or thereabouts. I should not do arithmetic live on air.
But it doesn't seem much to write home about when Rachel Reeves said in the summer, we've got a 22 billion fiscal black hole. Now, I think a lot of that is going to be plugged by some clever accounting and also the frozen allowances that you've mentioned as well. They're not going to give those up very lightly. But other taxes up for grabs. Now, the ones that I've seen has been capital gains tax and inheritance tax. Everyone is really worried about CGT going up.
And I think that's one where if that goes up, it could go up for any transaction on or after budget day. There's about 2 months to go, and I would expect that clients are really thinking about whether, if they've got assets they're thinking of selling, whether it might be better to sell it now at today's rate of tax rather than waiting and potentially paying a higher rate.
So, as a reminder, CGT currently is 20%. We've always said that's a really good rate of tax for capital gains tax. However, I was first to go in line to go and get my Oasis tickets this week. And the last time Oasis were together in 2009, under a Labour government, CGT was 18%. Do we really think CGT is going to go up to 45%?
I don't think it's going to go up to 45%, but I would not be at all surprised if it went up to 25 or 30 pence. What I don't think we'll get is an allowance for inflation, and that's because one of the advisors that Rachel Reeves has had working with her is Edward Troop, who was formerly Permanent Secretary at HMRC, and I know that he thinks that indexation relief is far too complicated. I do think it's likely to go up, but not by too much. Otherwise, it becomes counterproductive, as Neil and Roger were saying last week.
Yeah. And what about pensions as well? I've seen a bit of activity over the last few weeks, because this is what you do on your summer holidays. People worried that pensions relief is going to get curtailed to either the basic rate or maybe lower, certainly lower than the additional and higher rate, and scrambling around trying to make some pension contributions. Would this happen overnight?
I think it's difficult to change the rate of relief overnight because that's a big and complicated change, but they could say that any lump sums drawn down after budget day, the amount that's tax-free could be limited to, say, £100,000 rather than the current level of just over 250,000. So again, if you're about to take some of your pension, never do something just for tax reasons, but if you're thinking of doing it between now and Christmas, perhaps take a tax-free lump sum in September rather than waiting and hoping you'll be able to get the same treatment in November, December.
Yeah, and if you're thinking about being particularly generous to your children, inheritance tax has been talked about probably more and more over the last few years than ever before in my time, Heather. And I've had a couple of discussions with clients and friends and family members, unfortunately not my family members, who are not particularly generous, but they're thinking about making quite sizable gifts because there's a perception, a rumour that the 7-year rule, the potentially exempt transfer rule, which is unlimited, that's going to get reduced or changed in some way. Reminder that the US has a lifetime gift allowance. And I do wonder, I've said this before, whether the UK might go that way, because the 7-year rule means that unlimited gifts, actually inheritance tax is an optional tax, which some people say, and no one pays 40% because it is reasonably easy to plan around it. You give it all away or you spend it all. And for those of you who are listening who are fans of Richard Pryor, you will want to watch Brewster's Millions if you are thinking about your inheritance tax planning. Any other taxes that we think might be up for grabs? I know we've said no income tax, no national insurance, but come on, those are too attractive, aren't they, to just brush under the carpet?
I mean, interestingly, I was listening to another podcast, one by the IFS that Paul Johnson was speaking on earlier this week. And he said, actually, the simplest thing to do would just be to break the manifesto pledge and put 3p on income tax. I really can't see that happening. It would be a very courageous decision, as Sir Humphrey used to say to Jim Hacker in Yes, Prime Minister.
And look, if I was Chancellor, and I'm not, and I don't want to be, those are the sorts of difficult decisions that you do need to make. I cannot get my head around messing around with VAT on private school fees, non-dom, CGT. I know I've talked about some of the wealthier taxes there, but we've just covered in the last few minutes, air passenger duty, etc. And if you really want to raise taxes and really move the needle, you've got to do something with income tax. And that would raise, I think, about 15 to 20 billion if you were to add 3p to the pound. And if, just again, this isn't a plug for the IFS at all, but if you are that way inclined, there's a brilliant Ready Reckoner calculator on the IFS website if you do want to be Chancellor, and you can move around the various dials on there to see how much revenue you would raise as Chancellor, or potentially even give away. In terms of then the next steps over the next few weeks, Heather, we've got about 8 weeks until the budget on the 30th of October. What are the other things that I suppose you're going to be thinking about and talking to people about in the run-up to that budget?
I think the main thing is not to do something just for tax reasons, and not to try to do something that's too clever by half, because I think for previous budgets, particularly when we've expected changes to capital gains tax or inheritance tax, people have tried to do fancy schemes that don't work. So keep it simple, but perhaps if you're thinking of having a massive holiday with your bonus that you're expecting to be paid in March, you might be paying more tax on that than you think. So perhaps rein back on spending for a little bit. I do wonder whether Keir Starmer is deliberately overcooking it a bit and saying it's going to be dreadful, everybody needs to be prepared for pain. And then perhaps the OBR will come up with some slightly more optimistic forecasts, and Rachel Reeves will, after all, manage to pull a couple of rabbits out of the hat.
Yeah, and you've stolen my final lines there, Heather. I do wonder if there's some good political positioning here. Maybe it's not going to be as bad as what we're all speculating right now, and I wouldn't be surprised at all by that. Sitting there, and actually I will be on holiday for the budget this year, but listening in, as any good tax advisor would do on their holiday, I'm not so sure it is going to be as painful as what Keir Starmer and Rachel Reeves have led us to believe. But let's see who's right about that. That is all we have time for this week. We've covered a lot of ground there in just over 10 minutes or so, Heather. I think the budget statement's going to be a bit longer than that. Just a reminder to everyone who's listening, we release this podcast every Friday on the Blick Rothenberg website and all the usual podcast platforms, so you can listen wherever it's most convenient for you. We record and release them in less than 24 hours, so you'll always get the latest news and updates from our team of experts. If you enjoyed the podcast, please subscribe and give us a rating or review. We'd love to hear your feedback.
If there's any subject you'd like us to cover, you can contact us via the Tax Factor page on the Blick Rothenberg website. We're sorry we can't give individual advice, but we're always keen to hear what you would like to hear about. I'm back next week with Ellie Theochari.
And my thanks to Heather. The last time I was on this podcast was the day after the election, and a lot has happened since then. Not at least a few summer holidays, but a lot of political positioning. So until next week, goodbye and have a great weekend.
That's the Tax Factor. We'd like to thank you for making us one of the UK's top 20 podcasts. Find all our previous episodes wherever you get your podcasts. And join us again next time on The Tax Factor.